Hi, I'm Jonathan Shine with National Real Estate Investor, and we're at the National Net Lease Investment Conference in Chicago with our patron sponsors, Mesirow Financial and Jenner & Block. And I'd like to welcome the moderator of the Capital Markets panel, Stephen Jacobsen, Senior Managing Director of Mesirow Financial. Stephen, welcome.
Thank you, thank you.
As the moderator of the Capital Markets panel, what was your first takeaway? What did you learn from your panelists?
Quite a bit of interest in making loans these days versus how the environment was as of a few years ago.
That's amazing.
Adequate capital out there for respectable quality transactions.
And when you say respectable quality transactions, are you looking at AAA tenant?
Well, AAA tenants are still rare. I would say anything investment grade or better.
Okay. And what kind of equity requirements do you see? I mean, you're in the field quite a bit yourself. What are you looking at?
Well, in the net lease arena, very little equity is required these days to purchase these transactions. What we're doing is monetizing the lease stream, and whatever present value cash flow that'll throw off will result in is what we'll lend.
Okay, and are you seeing more activity on a regional basis, national basis at this point?
I wouldn't say, I would say national basis. I don't think we're seeing a particular concentration of transactions for any particular region. What we are seeing more and more of, though, are actually less retail and
Really?
More governmental and not-for-profit type transactions, such as hospitals and universities, federal, state, and local government transactions, and healthcare.
So you're looking at more public infrastructure at this point?
It's a more robust area than retailing, certainly, which is the traditional niche for credit tenant and net lease transactions. Retailers seem to be, as a generalization, slowing down in their growth in terms of new stores and facilities, whereas the public sector and the not-for-profit sector seem to be expanding at this time.
And why do you see that happening at this point in the cycle?
That's a very good question, and it's related to a number of reasons. Let's take the retail perspective first, and that is just, I think, online retailing is expanding. And the reason, the need for big box retailers is stable at best.
Could have even said that it's dwindling at some point.
And dwindling, agreed. Whereas in the not-for-profit and the public sector, let's take the public sector. Many state and local governments are becoming averse to bonding, increasing debt on their citizens, debt levels on their citizens, and at the same time, they need space. The demand for space and demand for public sector services has never been greater, so the private sector on a build-to-suit basis is filling that niche currently.
Not only that, it's a good way to raise capital for a lot of these municipalities.
Exactly.
We've seen there's some struggles over the last couple of years.
Exactly.
Well, that's very interesting. So in conclusion, what do you see as the future for the net lease market in the next 12 months?
I think it will be strong. I think basically the federal government has said that interest rates are not going to accelerate in any sort of a dramatic way, that rates will be held pretty close to current levels. And I see the same trend, meaning less traditional retail expansion and more governmental expansion on the built-to-suit basis.
Wonderful. Well, Stephen Jacobsen, Mesirow Financial, thank you for joining us at the National Net Lease Investment Conference.
Thank you for having us.